Hello everyone, welcome back to the channel. Today we're diving into August's Rake review, written by me and Rake. It was a month full of extremes. Bitcoin hit fresh all-time highs, and then it tumbled after a massive whale sell-off. We'll unpack all the key stories, the market data, and what comes next. Let's get started. August was a roller coaster. Bitcoin began by surging past 124k, fueled by better than expected CPI data and geopolitical rumors involving Ukraine, Russia, and even a proposed meeting between Trump, Zelensky, and Putin. However, a hot PPI print quickly reversed the rally, sending risk assets in crypto tumbling. Then came a dovish speech from Fed Chair Jerome Powell, sparking another short-lived bounce. Just as momentum was building back, an unexpected Bitcoin whale dumped 24,000 Bitcoin worth $2.7 billion, instantly erasing over $4,000 within minutes. The whale still holds around 150 Bitcoin, hinting at potential future volatility. Volatility was back in force, and it reminds us why Bitcoin is both beloved and dreaded. Are we nearing the end of this bull run? Historically, Bitcoin peaks appear around 500 days after each halving. As of August, we're about 490 days post-halving, which was back April 20, 2024. Bitcoin's price action, like tagging 124,000 and showing signs of slowing, it fits the classic cycle narrative. That said, many argue this cycle is different. Growing institutional involvement, macro influences, and narrative-driven price movers may be diluting the halving's traditional impact. Events like BlackRock, Michael Saylor, or political statements could even shorten or extend cycles. So maybe cycles still matter, but they may no longer be the only part of the Bitcoin story. Now let's talk seasonality. September is historically a rough month for Bitcoin, with an average decline of around 5.58% and 9 of the last Septembers finishing in the red. That being said, technical charts are showing some critical support between 104,000 and 107, with some deeper being just at above 100,000. These align perfectly with a typical 5% pullback in September, meaning if history holds, these levels could act as a cushion. If they do also hold, October, which is historically bullish, could set the stage for an even stronger Q4 rally. Looking ahead, two big drivers stand out. The Federal Reserve's interest rate decision on September 17, with the markets pricing in a near 85% chance of a 25 bips cut, and potentially developments in the Ukraine and Russia conflict. If the Fed cuts and maintains a dovish tone, like Powell's August speech, Bitcoin can continue to rally. On the upside, a breakout toward 130k remains the next major target, but this requires clear structural strength and macro support. So while September could be bumpy, these catalysts could turn the tide in favor of the bulls. So what happened in August? Well, let's check the news. Firstly, the XRP co-founder Chris Larsen came under some scrutiny after his wallet was linked to the sale or movement of 50 million XRP tokens, about $175 million worth, right around XRP's all-time high price. Roughly $140 million of these tokens went directly to exchanges, putting downward pressure on the price and fueling criticisms of centralization within the project. Over in the US, Donald Trump signed a landmark executive order allowing Americans to hold Bitcoin and other crypto assets within their 401k retirement plans. It's super. This could give more than 90 million Americans direct exposure to crypto through their retirement savings. It's a huge step for mainstream adoption. And finally, Chainlink has partnered with the US Department of Commerce, bringing key economic data like your GDP, PCE inflation figures on-chain. This validates Chainlink's infrastructure role and signals serious institutional confidence within the blockchain as a trusted source for public data, not just Bitcoin, but the broader crypto space. Now the general market update for August. Well, Bitcoin dropped around 6.5%. Ethereum rallied nearly 19% and reached a new all-time high. Solana gained 16.7%, and Chainlink did lead the pack with a 37.3% rally in the month, breaking into the top 13 by market cap. Despite the alt strength, the overall crypto market cap fell slightly by 0.56%. Now onto the education side of things. Another important risk that we flagged in the Rake review was Bitcoin treasury companies. These are where firms hold large Bitcoin balances within their balance sheet, and it could pose a contagion risk. Strategy, formerly MicroStrategy, is at the front of this, having issued debt to accumulate BTC. Others like Tesla and Block have also followed suit. If price suddenly collapses and these companies are over-leveraged, then forced sales could exacerbate downward spirals, similar to what we saw in 2021 with FTX or Three Arrows Capital or Alameda, which were over-leveraged companies. That being said, the risk lies with the companies and not Bitcoin or the network. Bitcoin's fundamentals in security, decentralization, and scarcity remain intact. Long term, it's a reminder, ratings on fundamentals shouldn't be lost amidst balance sheet dramas. In summary, August was bloody volatile. There were new highs, whiplash volatility, and looming cycle questions. September asked some tough choices. Will the support hold, or will we see a deeper sell-off? There are big events ahead with the Fed decision and geopolitical things that could swing momentum. Altcoins remain decently strong, and structural risks around treasuries deserve attention. Thanks for watching. If you found this breakdown helpful, hit like, subscribe, and drop a comment. What do you expect for Bitcoin in September? See you next time.